Good afternoon, ladies and gentlemen. It's 3 p.m. and accordingly, I'd like to call this meeting to order. I'm Bill Fish, Chairman of the Board of People's State Bank and PSB Holdings. With me is Scott Catanaugh, President and CEO of the company and the bank, Mark Oldenburg, Secretary and Treasurer of the company and Chief Financial Officer of the bank, and Pat Heyer, Vice President of the company and Senior Vice President of the Commercial Division. Scott will act as chair and Mark will act as secretary for this meeting. I'd like to introduce all members of the board of directors. Scott M. Catanaugh, Lee A. Gunther, Patricia M. Hans, Carla M. Kiefer, Kevin J. Kraft, Peter W. Knitt, Corey B. Vanderpool, and Robert F. Eastman. And a special welcome to Bob, who joins the board to fill the spot of retiring Chuck Cadorsey. Bob has been the CEO of Sunset Bank and Savings, which we'll discuss in depth later in the presentation. This represents the majority of the directors in attendance. I'd like to honor several members of the board of directors who retired this past year. Charles A. Cadorsey, Thomas R. Pulzer, and William M. Reif. Thank you, gentlemen, for your years of service and dedication to People's Bank. As you will see during the program, today we had an exceptionally good year in 2020. I'd personally like to thank the People's team for their hard work and dedication in achieving this success in very challenging times. Please note the following agenda for today's meeting. Scott Catanaugh will give a president's message, including the bank's growth to $1 billion in assets, key financial drivers, West Allis opening and acquisition of Sunset Bank and Savings, a strategy review, and 2021 focus. Pat Heyer will talk about the unique culture of People's State Bank. Mark Oldenburg will provide a review of 2020 financial performance. Following the formal business meeting, we will open the floor for questions and expect to conclude the meeting by 4 p.m. You may submit questions using the Q&A button at the bottom of the screen in the Zoom webinar. Type your question into the box and hit submit. We will review and respond appropriately at the conclusion of the formal business meeting. I'd now like to turn the meeting over to Scott Catanaugh, our president and CEO. Scott?
Thank you, Bill, and welcome everyone who's on the call today. I appreciate, first of all, your participation in yet another year of a non-traditional Zoom call for our annual meeting. I will ask you to look for some information for a face-to-face get-together that we'd like to have just to celebrate seeing each other again later in the year on September 14th at the Hilton Garden Inn here in Wausau. So we do look forward to seeing you face-to-face soon. Thank you too for submission of your proxies for this meeting, even though we couldn't meet together. That's an important part. And I thank you for following through on that. Next slide. Please make a note of this forward-looking statement caution as we talk about the future and things that are not certain, but we'll give our best indication as we move forward. As Bill had highlighted, one of our major goals in 2020 was to get over $1 billion in assets for the first time in the company's history. And when you look at this chart, I wanted to point out how the growth has been steady since our inception back in 1962. It took us 17 years to get to $100 million in assets. And it took us 16 years to go from 100 million to 500 million, and 15 years to get from 500 million to $1 billion. But along the way, as you can see in the chart, we've had new locations, new people, new products, and new markets to continue that growth. And economies of scale are important in banking. We don't grow to forget our roots, but really to take what we do well, that Pat will share a little bit about later on, and our culture to even more and more customers for the benefit of our customers and shareholders. Randy? Some things that are interesting to note in what drove kind of an unusual year in 2020 from a profit standpoint. Our income was still very strong at $10.7 million despite the COVID activity. When the virus began to break, it raised a couple of important things. The first is you would expect economic activity to substantially decline, increasing credit risk. At the same time, when economic activity declines, you'd expect longer-term interest rates to also decline. When both of those things happened, we had two items that you saw in our financial statements in 2020. We saw a much higher provision for loan losses to prepare for the yet unknown impacts of COVID-related losses. We'll speak in a little bit about, I think we're going to be much better than we had expected back in March of 2020, but it was a large increase in the provision during the year. On the flip side of that, low long-term interest rates allowed many people to refinance their home mortgage and save on their monthly payments. We participate in the secondary market to get those lowest long-term fixed rates and are paid a gain on the origination. So in the end, we had increased mortgage activity for income of $3.8 million, which offset largely the $4.7 million increase in provision for loan losses. Another important activity that had a lot of work in 2020, but probably the income in 2021 is our originations to customers, small business customers, through the SBA's PPP loan program. For those of you that may not be as familiar with that program, it allowed us for well-defined small businesses established and defined by the SBA to provide funds that would ultimately be forgiven by the SBA, so the customer did not need to repay, provided they maintained employees on their payroll despite the economic decline in the pandemic. The program was very successful for our customers, and we earn an origination fee when we originated such loans. When the program came out, our team pulled together, our commercial team and really our bank-wide team, working what felt like around the clock to meet those needs. And relative to our size, we were a very large participant and originator in Wisconsin banks to customers in that program. At the end of December 2020, there was still $2.7 million of origination fee income that we had not yet recognized into our income. That's because we chose to conservatively recognize that income at the time our borrower either has the loan forgiven by the SBA or, for the part not forgiven, repays the loan. That forgiveness is largely happening now in 2021. So a large income driver in 2021 will be recognition of that $2.7 million in fee income. So let's talk a little bit about the credit review. One of the things that I think that our team did well and very conservatively as we evaluated potential credit risk is we, like virtually all banks in the country, went through a temporary period where we would permit loan modifications on a short-term basis to help small businesses get over the hump of the pandemic economic impacts. Some went to interest only for a brief period. Some went to a full payment deferral for a brief period. In that process, each time we had a customer that asked for a deferral, our credit underwriting and commercial banking team fully looked at that customer again, and we updated our loan credit risk grade to reflect that more conservative posture. Because of that, when you look at information in our earnings releases related to our credit grade numbers, you should have the confidence that we have tried to be very proactive and very conservatively identifying those credits. Many of those credits are going to work out in a positive fashion, and we're already seeing that with the broader economic recovery that seems to be taking place in our markets and across the country as a whole. There were still loans classified as watch and substandard at the end of 2020. It was about 8.4% of our commercial portfolio. That's about double the 4.3% at the end of 2019. We have identified those industries that are most impacted It's primarily hotels and restaurants, and also to a smaller extent, retail type of real estate buildings. If you were to look at the increase in dollars from our watch list credits all the way down to our impaired credits, what we call grades 5, 6, and 7, that total, the increase of it during 2020, about 60% was related to hotels and restaurants, and the remaining 40% was largely related to retail related customers. What that tells us is that our problem credits that we're keeping an eye on and working with is a very small sliver of our loan portfolio as a whole. The vast majority of our loan portfolio continues to perform very well. We've identified the industries that need special consideration. And within that group, we've identified specific borrowers where we work closely with. As noted on the slide, our loan portfolio at the end of 2020 had approximately $34 million in hotel loans in total. Not all of those are performing poorly, but in total dollars was 34 million and 25 million in restaurant loans. We aggressively built up our allowance for loan losses in 2020, in fact, increasing it from 0.97% of gross loans to 1.5% of gross loans when the SBA PPP loans are excluded, since they'll be forgiven and are guaranteed by the SBA. It's a very large increase in the reserve relative to risk. We think that positions us very well for continued loan growth and strong equity position moving forward. Back in 2016, we opened a loan production office when we hired Jeff Musa, a local longtime commercial banker. Part of that longer term plan was always to eventually open a full service banking location. And in early 2020, we did open a full service branch in West Dallas on West National Avenue after purchasing in 2019 an existing building and remodeling it for banking operations. The building turned out very well. We're very excited about it. And despite the pandemic hitting virtually 1 week after we opened our doors there, we did grow deposits to almost $17 million during the year. And our loan portfolio ended the year with $105 million in the portfolio. And then we had more excitement happen in our greater Milwaukee area. Last week, we completed negotiations and completed the purchase of Sunset Bank and Savings, a bank that had been operating in the Waukesha area for 22 years. Purchasing Sunset and now partnering them with Peoples and eventually merging them into Peoples later this June gives us entry into what's considered a very strong banking market in Waukesha County. This is a complement in addition to our West Dallas location. Together, we now have almost $250 million of total assets in the greater Milwaukee area. It also allows us to jumpstart our retail banking operation. As we made that investment in West Dallas, it got off to a slower start as the governor had our safer at home order and business activity moved slowly in the Milwaukee area. We now have a retail customer base from Sunset to cross-sell our additional products. The size is manageable for us to integrate well, and we recently hired a new longtime commercial banker, Mr. Chad Frank, from the Waukesha area to lead our team down there. As Bill had noted, the Sunset Bank CEO, Robert Eastman, is joining our board of directors for the next 2 years and will also assist with that successful implementation. As I mentioned, our deal closed last week, Friday, and in mid-June this year, we'll complete the data conversion and we will rebrand Sunset as another People's State Bank location in Waukesha. Just a note on our 2012 and 2020 stock activity. The pandemic created a lot of fear in small bank investors, and there was very little investing and reinvesting in small banks through much of 2020. Just to give an example, if you look at our performance relative to all the banks in the nation, we looked at all the banks in the nation. PSB's return on equity in 2020 would have been in the top 26%. Loan growth would have been in the top 20%, and our deposit growth was in the top 38%. And despite what I would consider to be strong relative to performance, our stock price did decline 25% during 2020, reaching $20.57 per share at the end of December. Now, as the economy has opened, we've already seen small bank investors join back in investing, including in PSB. PSBQ, that's our stock ticker. Our prices were here at Notes $25.50 per share. We've had shares above $26 per share this week. That's up approximately 25% so far during 2021. And I look forward to a continued recovery in the share price in 2021. Just as touch base on the broad strategic view again, we are looking to create shareholder value through a couple of key important factors. The first is continued growth in new markets, such as in the greater Milwaukee area, but also in other areas of Wisconsin where we see opportunity and great banking people to lead it. We're also looking to increase ways for PSBQ buyers and sellers to more easily buy and sell shares. One way to do that, to create literally daily trading in the stock, would someday to enter the Russell 3000 index, which is a collection of smaller public companies, not just banks, on the NASDAQ exchange. To enter that Russell 3000 index, however, you need to have a minimum sized market value or total value of the company, and that minimum is adjusted every year. Due to some things that have happened over the past year, that minimum to enter has increased quite a bit. The hurdle has gone up, but it is something in our midterm strategic planning that we continue to look at as an option to create greater liquidity for shareholders. In the meantime, we continue to share our investment story with not only institutional investors, but also with local people that are familiar with the bank and have an interest in investing in a community bank that makes a difference and provides value for shareholders. Some of the items that we'll focus on in 2020 here in the near term is, of course, our Sunset Bank integration and growth. There's a lot of strong growth potential, not just over time, but even in 2021, we're excited about. We've also increased or are looking at increasing our existing customer wallet share by looking at both ends of the customer base. On one end, we're increasing our private banking support services and products to assist our higher net worth customers. And on the other side, we're also looking at a product tailored to the underbanked population that not only meets the need they have to be brought into the regular banking system, but also a potential important retail growth base over the long term. And then lastly, we're also looking to increase our digital banking usage, which worked well during the pandemic, and we saw significant growth of customers using existing and newly created tools, and identifying and working with those problem loans to positive resolution yet this year. And with that, I would like to turn it over to Pat, who's got some great comments regarding the people's culture and some information related to more specifically how we managed our credit challenges in the past. Pat?
Great. Thank you, Scott, and good afternoon, everyone. I wish we could all be at Memories Ballroom this afternoon and share a little camaraderie to our common connection with PSB Holdings and People's State Bank. In time, we'll soon be back to normal and be able to share together in person our common bond of one of the finest banking organizations in the state of Wisconsin and beyond, People's State Bank. Today, I'm going to focus primarily on the unique culture we have developed in the company. The culture is the foundation for the future growth of PSB Holdings and is unique for sure. I'll then follow up some of Scott's comments on how managing through the pandemic and a few more specific examples of how we are managing the asset quality in the loan portfolio. But first, culture. I will be celebrating my 14th year at People's State Bank in October. When I say celebrating, I mean that like other special days, birthdays and anniversaries, it has a special meaning. It has been extremely rewarding to see the company double in size and triple in earnings since 2007. A big part of that success that will carry us forward in the culture in the future is this culture. Next slide, Randy. People's is my fourth banking stop in 30 years. I worked at small banks like West Dallas State Bank, not too far from our new branch location on National Avenue in West Dallas. And I worked at very large banks like Jamie Dimon's Chase Bank. And make no mistake about it, it is Jamie Dimon's bank. I've seen different corporate cultures, good and bad, big and small, centralized and decentralized. In every organization, I've learned a lot. Sometimes what to do well, and sometimes what not to do at all. At Peoples, we are uniquely positioned to continue expansion. As I look at our differentiators, I put that uniqueness in 5 buckets: our people, our quality of delivery, capabilities, team culture, and process. Next slide, Randy. Our goal is to outbig the smalls and outsmall the bigs. The perception that many have is big banks are cold, which they can certainly be, but have capabilities and have good product lineups. Perception is small banks are personal, but lack the products. This is the quintessential opportunity for People's State Bank. Our ability to have many products the big banks have and deliver those products through technology and also do it at a personal level. Here are some examples. Nearly $20 million of legal lending limit. That means 98% of the businesses in our community fit into our legal lending limits. That's a huge capability of People's State Bank. One of the things I'm most proud about with our team is our pride on delivering credit needs quick and responsibly. Not sure that we would be $100 million plus in Milwaukee and Southeast Wisconsin if Jeff Musa wasn't able to have a credit team behind him that was able to deliver quick credit needs. Every conversation is important to our customers, and that's why personal service will never go away from this organization. We make sure that our people are trained well to have quality conversations with their customers. We deliver sophisticated deposit services. Tim Dively, head of our ops team, along with our treasury management team, are very savvy on understanding our technology capabilities through Jack Henry. Yet, we deliver that with a very personal touch through Gail Betcher and her treasury management team. Next slide, Randy. Many of the big banks are focused on cutting costs. At People's State Bank, we want to become more efficient without compromising service. We do that in a number of different ways. First, we differentiate service by size of client, but have access through multiple channels. We certainly have to have differentiated service for a customer that has, say, $420,000 of deposits versus a customer that has $42 of deposits. However, those customers are still important to a community bank like People's, and it's important to us to have multiple channel delivery to take care of that customer's needs. Digital platform and technology, as Scott mentioned earlier. Tim and his team have pushed this organization to another level of digital platforms and technology that's going to carry us to the future. And lastly, credit structuring. We make credit decisions with a lot of smart people around the table, making good decisions for both the bank and the customers. We have a can-do attitude when it comes to making sure that we have good decisions for our customers' credit needs. Next slide. Our people are incredible, hardworking, smart people with big bank experience. Many of them have US Bank, BMO, and Wells Fargo experiences and beyond that. But what we do is allow those people to make good decisions in the field with our customers every day. I always emphasize to my bankers, be business people first and bankers second. You have to have good conversations about the needs of that customer, what their goals are, what their objectives are before we can talk about product. We all come from middle-class families and state school educations. If I look at Scott, good example, Marshfield graduate, UW-Eau Claire graduate, and now is a CEO of our company. Most of us have that same type of profile, hardworking middle-class families that went to state school for our education. That allows us to face off with our customers incredibly well. Collaboration within our staff, we always have multiple people making decisions. We make better decisions when we have multiple people interfacing with each other. And lastly, we have a young team that is very deep, very dedicated, and is positioning well for the building our future leadership of the organization. We have to get the word out, and we're doing a number of things in order to accomplish that. Our marketing department is working with our bankers to be more efficient in social media. We're getting better at asking our very good customers for referral. We've always been very good at community involvement, but it comes to all of our stakeholders hearing this message and making sure that we're driving additional business to People's State Bank long-term. Next slide, Randy. This is a slide that we refer to frequently as we're looking at People's State Bank. You can see back in the recession, we had elevated non-performing assets and reserves. We had a little tick up in 2020, but I can say confidently that is nowhere near what it was back in the Great Recession. And as a matter of fact, the non-performing assets are 1/3 of what they were in the recession. Our charge-offs ticked up a little bit, but I remain confident today that our asset quality remains solid. Next slide, Randy. Historically, we've had very good asset quality relative to peer group. We will over time continue to be above peer group. I'm confident of that. Scott and Jared Morris, the head of our credit department, have been working on more portfolio analytics to spot hotspots within our portfolio in the event of future recessions. That big funnel that we're looking at right now has narrowed down into, as Scott mentioned earlier, very few specific industries and very few customers that we are working on for collection plans. Those collection plans are surgical in nature. There's a handful of customers that we are working with to manage through their business challenges, but these are manageable based upon the broad experience that we have with our team. And lastly, we're taking very much a community bank approach to what we do. Many banks would have their workout division immediately look at some of these loan relationships. We work together with our customers to try to find good solutions for both them and People's State Bank. So I feel confident about the culture that we built here at People's State Bank to continue the growth of this company, as well as the asset quality continuing to perform above peer group. Turn it over now to Mark Olenberg to talk a little bit more about the financial review of People's State Bank and PSB Holdings. Mark?
Thanks, Pat. Thanks for everybody for being on the call today. For our peer group comparison, today we're going to use a peer group of the 750 million to 1.5 billion banks across the US. That's 125 banks total this year. Next slide. For 2020, we had earnings per share $2.40 and net income of $10,700,000. And as Scott mentioned, our total assets reached just over 1.1 billion at year end. That was an increase of 16%, driven by our PPP loan origination, which still was 102 million at the end of the year. And then also on the deposit side of the balance sheet, where we saw stimulus funds, a lot of $1,400 checks come in and sit in savings accounts. And then also an increased savings rate from both our retail customers and our business customers. Our tax adjusted net interest income was an increase of 700,000 from 2019. That was impacted by both a decrease in interest rates. The Federal Reserve had lowered rates in March of 2020. And then also from our expanded balance sheet, being up 16%, we were able to expand the loan base through the PPP program to out-earn the negative impact from lower interest rates. And then our fee and non-interest income was up almost 3.8 million from the previous year, and our operating expenses were up just 1.9%. Our non-interest income included $5.7 million of mortgage income, which was almost a $3.9 million increase from 2019. That was driven a lot by low interest rates and then increased consumer buying. And then on the expense side, I think the 1.9% shows that we were able to manage our expenses pretty well. Not only do we not have to cut expenses dramatically to return a good earnings per share number, but we also didn't increase our expenses dramatically in order to make the adjustments that we had to during the safer at home orders and a lot of the remote working that was going on. Next slide. Here's a 5-year history of our return on average equity. You can see for 3 of the 5 years, we were greater than 12%. For the 2 years that we weren't, 2017 was impacted by the changes in the tax laws, and then 2020, which was impacted by the pandemic. I think this slide shows our ability to generate consistent returns and to do that even in years of stress or unexpected changes like the tax law change was. On the next slide, here's our 5-year compounded loan growth, 2016 to 2020. You can see in 2017 to 2019, we had pretty consistent growth, and it was growing slowly, 5 to 6%. And then in 2020, it shot up to over 8% with all of the PPP loan origination. As a reminder, we did $117 million of originations. And like I said, 102 of that was still on our books at year end. Net interest margin. Here we have a look at our 5-year history. You can see 2016 to 2019, pretty consistently around that 350 range. And then 2020, it dipped to 3.2%. A couple of factors going into that. The PPP loans were put on the books at 1%. So certainly a lot lower than what our normal organic loan growth would be. The lower market rates, I mentioned the Fed had decreased rates in March of 2020. That had a significant impact, not just on loan rates, but on our investment portfolio as well. And then, of course, competition, as many banks saw a lot of money come onto their balance sheets from the PPP program and stimulus money. A lot of other institutions were chasing good loans, so there was a lot of competition that was driving rates down. The comparison for 2020, back up a slide, Randy. The comparison for 2020 isn't as clean as we would like it to be, just because there were a lot of different ways different banks were recognizing income in 2020 related to the PPP program. So you can see the peer group was a little bit higher than us, but we'll see how that plays out in the next couple of quarters going forward. And then I think net interest margin is going to be an industry topic and certainly a People's State Bank specific topic going forward. I think net interest margin compression because of the low rate environment and competition is definitely going to be a challenge for the next year or two. Next slide. Here we're looking at our efficiency ratio. Again, we've reliably operated around 60%, just slightly better than the peer group that's been in the mid to high 60s. In 2020, that declined to 55%. As I said, we were able to hold our expenses pretty steady. And then with the increase in the balance sheet of 16%, that drove the efficiency ratio down. Again, I think this is another topic for the industry and for us specifically. As more and more customers go to digital banking, we're going to be looking for ways to get even more efficient and expanding the balance sheet and holding our expenses steady so we can bring that number down as much as possible will be important going forward. Next slide. Okay, we're looking at non-interest income as a percentage of operating revenue and non-interest expense as a percentage of our operating revenue. You can see we're better than the peer group in all of the years, of the past 5 years. Again, the expenses running just about 55%, and our non-interest income shot up to over 25% of total operating revenue based on the great year that we had in mortgage, a good year that we had in wealth management, and then a few other one-time items that helped drive that number higher. Next slide. Here's a look at our 5-year compounded growth rate for the dividend. consistently has been, above 5%. The last 2 years, up around 8%. Our dividend yield using the 12/31 book value was 1.8%. And then our payout ratio for last year was about 17%. I think that should give everybody confidence that we can continue to increase our dividend going forward. There are some banks that have a much higher payout ratio, but it puts their dividend into jeopardy if they have hiccups in individual years. So we've got a pretty good case for being able to continue to increase our dividend going forward. Next slide. Here we have look at our net book value growth. Related to our return on equity, you can see we've been able to produce better than 8%, and in the last 3 years, better than 10% book value growth. That's exceeded the peer group for each of the 5 years, and has been over 10% for 4 of those 5 years. Next slide, Randy. Then here we're looking at cumulative shareholder return. Of course, early in the year of 2020, you can see both People's and the peer group drop down into negative territory because all bank stocks were hit hard from the uncertainty related to the pandemic. But you can see late in 2020 and then again early in 2021, that's shot up quite a bit. We're actually outpacing the small cap banks at about 20% in total return. Next slide. And then this is a look at our price multiple, somewhat related to the previous slide. You can see we've been running a little bit behind the peer group. It was better in pre-2020, kind of widened out here a little bit, but I think we'll be closing the gap on that as we move forward. Next slide. This is just a brief summary of our 2020 share repurchases. We bought about 18,000 shares. That was early in 2020, before, like pretty much everybody else in the industry, we had to stop our repurchase program. We were buying shares, average price of just about $26. So we bought just over half of what we did in 2019. We did restart the program with a small repurchase plan late in 2020, and we have that going again here early in 2021. So we'll see what the results of that look like for 2021. And then next slide. This is just a history of the share buyback over the last 5 years. You can see back in 2016, we were buying shares back at 15. Last year, like I said, it was almost 26. Historically, the stock repurchase program has been a benefit for the shareholder. We've been able to buy shares at less than what the next year's stock price has been. So we're looking to continue that. We think it'll be a benefit to the shareholders going forward. And next slide. And then this is just a reminder that the stock repurchase program is looked at every quarter by the board. It can be changed by the board quarterly going forward. And then the last thing I want to mention is please look for our earnings release that's coming out on Monday, April 26th. It should be released before the markets open. If you get a chance to read that and you have any questions on that, please reach out to me. Be happy to answer any questions you have on our first quarter results. Then I'll turn it back to Scott for the business meeting.
Thanks, Mark. So now we will proceed with the items on our agenda for the annual meeting of the shareholders regarding votes. So shareholders were mailed a copy of the notice of annual meeting and proxy statement on March 19th of this year. And the notice of annual meeting set forth 2 items of business for today. The proof of due notice of the meeting and the oath of mailing are filed and available for inspection if needed. Also, a list of shareholders as of March 5th, 2021, which is the record date for purposes of notice and voting, is also open for inspection if needed. The number of shares of stock represented by proxies at this meeting is approximately 3,350,000. That is 75% of outstanding shares. Since there is more than 50% of total outstanding represented by those proxies, I declare that a quorum is present and this meeting is hereby duly constituted. So we will now proceed with the business of the meeting. The first item of business is to elect 3 directors for a 3-year term as Class 2 directors. Pursuant to the proxy statement, the Board of Directors has nominated Lee A. Gunther, Carla M. Kiefer, and Kevin J. Kraft for re-election as Class 2 directors to serve a 3-year term. No other nominations have been received by the company pursuant to the procedures specified in our bylaws. The second item of business is to ratify the Audit Committee's selection of Wipfli LLP as the company's independent auditor for 2021. The board has no other business to present at this meeting, and the company has not received notice of any other business pursuant to the procedure specified in the bylaws. All shares represented at this meeting are so represented by proxies, and such shares therefore have already been voted. Therefore, we will disperse with the formalities associated with in-person voting by ballot. So based on the tabulation of the votes, I report to the shareholders that each of the nominees for election to the Board of Directors has received in excess of at least 98% affirmative of the votes cast. Each of the nominees has therefore been re-elected. Additionally, the Audit Committee's selection of Wipfli LLP as the company's independent auditor for 2021 has been ratified by 98% of the votes cast, and being greater than a majority, they are selected. That concludes the formal business of the meeting. And as Mark Oldenburg and I are the designated holders of the shareholder proxies for this meeting, I will now make a motion to adjourn the business meeting. And do I hear a second? I think Mark is on mute, but he is looking to second the motion. So I made a motion, Mark has seconded, and all proxy shares are voted in favor of this motion, and we vote that way, and the annual meeting stands adjourned. So thank you for your participation in the voting. We do now have some time here at the end of the meeting to respond to any questions that came through in the chat box related to things that we have shared or items that you have seen in the 2020 annual reporting information. So Randy, what questions may we have to answer?
Scott, the only question is whether or not Pete Knitt is in the meeting, and it says that Pat Heyer is going to answer this question.
Okay, Pat?
Needs to unmute. There you go.
Looks like Pete's on the meeting. Yes, indeed. So that's the only answer that we have. That's the only question we have.
Okay. Well, absent other questions, I do want to, 2 things I'll point out, like Mark had said, the March earnings release comes out on Monday morning, so you'll have the most current information at that time. And secondly, please look for information for our planned September 14th gathering. By that time, hopefully we will all be out and about, and we look forward to seeing you. And please make time for that if you can. So thank you again for your participation today. And I believe that concludes this meeting then. Thank you.